Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Kickstart video. Today's date is August 9th, 2024. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. We just saw that initial jobless claims came in at lower than expectations at 233,000 versus 240,000 expected. Prior month was revised to 250,000 from 249,000. That shows that the jobs situation is not deteriorating like the market thought. And we are seeing a subsequent rise in U.S. stocks. The Nasdaq index is now up 133 points. The Dow Industrial Average is up about 128, and the S&P is up 31 points. So it looks like the market is taking a big sigh of relief, but that means that those 50 basis point cuts in September will probably be whittled away. We may still get a 25 basis point cut. The Fed and the markets seem to think that, or the markets and the Fed, sort of is leading that way at their last meeting, that the door is open for take away some of the restriction as a result of lower inflation. Of course, we have a lot of inflation data coming out going forward, so that will be also dependent upon what that looks like. But all indications are that September will get a cut. It just may not be 50 basis points. Let's take a look at the euro versus US dollar from a technical perspective, and I'm going to start by taking a look at the 4-hour chart. And if we go back in time, we take a look at things like these highs right through here. Admittedly, we went up and made extremes here, but lower extremes right here. And then this is the sort of money area right here, where the price had a ceiling right here against some of these other previous highs, and another ceiling right here. In trading last week, the price came up to that level, and then on Monday we moved sharply to the upside off of the huge sell-off in the Nikkei index and sending the dollar lower. And then we came back down, tried to test this level and bounce higher. Could not get very far, and we broke back below that level in trading here today. What did we do? We came back up to that swing area between 1.0942 and 1.0948 and found willing sellers against that level. We are starting moving lower here. And back below the 38.2% retracement of the move up from last week's low to the high price that we saw in trading here today. We'll see if we can stay below that level. But this area was a key tell from market traders, in that it's helping to push the price to the downside. At the lows, we did have a low here and here in the last two trading days. Near the 109.02 level, just above the 109 level, nice natural support level. If we get below that 109 level, then we'll look toward the 50% retracement, and then we start to get toward this moving average right here, the 100-bar moving average on the 4-hour chart. So watching this level right through here, was an old ceiling through here, and then broke above it in trading this week, and then reestablished that ceiling. That, as long as we can stay below that level, in the short term at least, the sellers are still probably have the control in the euro versus US dollar. Let's take a quick look at the hourly chart to see where that stands, and you can see that, well, the price just broke below the 100-hour moving average. That level comes in at 1.0926, so that is ahead of this swing area right here. We'll see maybe that might be a early risk defining level or bias defining level for the euro versus US dollar. So stay below is more bearish. Here are our low prices from the past two trading days, which pretty much stalled again right ahead of the 109 level. So be aware of that on the downside. Let's take a look at the dollar versus yen next, and we'll start by taking a look at the hourly chart. And off the hourly chart, we're seeing the rotation to the upside off of Monday's lows, and that move to the upside has been able to get above the 100-hour moving average. That's a blue line in this chart. However, there is some reluctance to wander far away from that 100-hour moving average. So be aware of that. We're not out of the woods here. That we're going higher. In fact, we're still well below the 200-hour moving average on the top side. It may look like something like this over here, where we broke above that level, and but in this case we got closer to the 200. In this case, we still have a long way to go, as the 200-hour moving average still is playing catch up to the price action after the sharp move to the downside here. So so watch the 100-hour moving average in trading here today. If we're able to stay above that level, okay. If we go below it, be aware and be prepared for more selling. I'm going to take a look at the 4-hour chart. Why? Because this swing area right through here is important as well. And if you take a broader look over here and going back to this area right through here, it was a first initial support, and then became resistance through here, and then we moved below the level and moved out to the downside here. Came back up to that level, found resistance initially before breaking to the upside right here. Try to hold support against the level through here. And we did, and the price moved higher. We had one last test of it before moving all the way to the high here. In trading this week, we fell below that level and then tried to hold resistance against the level before breaking to the upside through here. And so we are back above that level, 146.84. So the buyers are trying to muster some momentum above that swing area and above the 100-hour moving average at the same time. So this area right here is going to be key for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar on the 4-hour chart. To start off with, what we did in trading this week, earlier this week, was find support against 50% retracement. That's this level right here at 126.71. Bounced higher off of that level. Also in play is the 100-day moving average. But in trading here today, what we've seen is a rotation to the downside that saw the price move below the 100 and the 50% retracement, making new lows for the week. But you see this green line right here? This is the rising 200-day moving average. So we have one of those clusters of support here defined by the 200-day moving average, 50% retracement, 100-day moving average. All those are key technical levels in my book. So we have to get below all three of them to increase the bearish bias. There's always a chance that buyers come in against the level. Why? Because risk can be defined and limited against them. What does that mean? That means if you buy against the level, you can always just put your stop below, let's say down here, and risk, if you've bought here, risk this amount on a trade in hopes that the price instead moves to the upside, gets back above the 100, and starts its rotation perhaps up to here. So that would be a low risk trading opportunity. That's what happens around clusters of moving averages. If you want to learn more about that, you can see my video right here. I did it yesterday. You can find it on our website. So look for that. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.